Hello everybody, and thank you very much for joining me today. Today is now March the 22nd. It's about 3 p.m. here in Istanbul, Turkey. We're going to compare the 2017 bull market to the 2021 bull market and see if we can find any resemblance to what's happening right now in this current major run. So today there's an FOMC meeting in the afternoon at 2 p.m. EST, which is going to mark a potential Fed rate hike, and Jerome Powell is going to speak for the second half of this meeting. And the anticipation is that we're expected to increase by 0.25 basis points, and that would be considered a neutral stance. And if we don't increase or decline instead, that would be considered very, very bullish. But in my personal opinion, if we get 0.25 or no increase, it's going to be a fairly good bull run, especially if we get a decrease. That's going to probably start off the year to a very bullish start, and we can see a potential huge rally for Bitcoin today. So make sure you're tuning in for this meeting at 2 p.m. EST time today, which is 9 p.m. in Turkey. I expect some volatility. I'm not really sure which way it's going to go, but if I had to bet on the direction, it would most likely be to the upside. There's an 86% chance that we're going to increase by only 0.25 basis points, and I would expect the market to rally according to this news today. I don't expect a much greater increase than that, and if we could actually pivot this early in the year, it could mark a really good bull run for the rest of the year. But in my opinion, I think that we're still going to get a major bull and bear fight where the bulls are going to win some months and the bears are going to win some months as well. Because right now, it's the year after the bear market, and every year after the bear market, for example, in 2014 and in 2018, the years after that were 2015 and 2019, and also 2023 is the equivalent of those years. And every time after the bear market, we usually end up having a major fight where it goes both ways. And usually at the end of the year is where we get closer to a potential bull market that could begin. So I do expect that the end of this year for us to be at a much higher price point than we were at the beginning of this year. And I do firmly believe that it's the year of accumulation. And I think a lot of people are going to start stacking up their bags, especially with Bitcoin and Ethereum. So this way they're going to prepare for this Bitcoin halving that's coming early of next year. And I do anticipate that in 2014 and 2015, we're going to get another major bull market rally. And within probably 5 to 10 years, we just never know, we could see anywhere from $250,000 to even over $1 million. So I am a perma bear with Bitcoins in regards to cryptocurrency in general. I believe that this is a sector that's going to blow up, and anybody that's currently in crypto right now has an amazing opportunity to capitalize on this current technology, and we are absolutely early adopters. You should be proud of yourselves for learning how to day trade and especially about the fundamentals of crypto. And I believe that this new sector is going to pave way to a multi-trillion-dollar industry in the future. So let's get on with this today. Today, we're going to focus on the comparison between the 2017 and the 2021 bull market using the exponential moving averages of 50. And we're also going to use one of my current favorite indicators right now called the Chandelier exit indicator. And this is an indicator based off of the ATR, or known as the average true range, where it takes a measurement of the volatility over a period of time, and then it gives us a gauge of the volatility as it's trending. Now, this indicator is best used when it's trending, and it's definitely not recommended to use when it's in a sideways motion. And I often find that in a very bullish movement to the upside, or in a very bearish movement to the upside, it's going to have a very clear resistance or support depending on the direction that it's going. And then once this clear resistance or support is broken based off of the Chandelier exit indicator telling us, which is based off of the ATR, it can give us a momentum change. And then if the volatility ends up breaking after a consistent downtrend or uptrend, it's going to tell us that it's broken, and this can indicate a trend change. So it's one of my favorite indicators, and I do believe that it's one of the best indicators to use to gauge when we're in a bull market combined with an EMA. So let's get right into this, and we'll talk about it further and give you a great comparison today. So to get this indicator on your screen, go to the indicator tab up over here and then type in Chandelier exit. And then the one that I'll be using is the one by Everget. I personally don't use the ATR standalone by itself because the Chandelier exit indicator is based off of the ATR, and to me, that's good enough. So for those that are new to it, when you set it up first, you're going to have a lot of different lines that I really do recommend that you customize. You're welcome to take a quick screenshot of the settings that I personally use right here, and then you can go from there and adjust it to what you personally like. I make sure that my period is set on the default 14 and the multiplier on the 3. And the best way to do a technical analysis on Bitcoin when you're going further back is always type in BTC USD and go to the Bitcoin USD all-time history index. It'll always be the third one here from the top. So if we go really far back, what we're going to notice is that there's always a trend of Bitcoin when it's moving to the upside. So for example, if we go all the way back to the 2017 bull market on the daily, what we're going to see is a constant struggle between the bulls and the bears. Sometimes it's going to stay green. For example, right here, you see that this is green and it's trending to the upside. And then what happens is, instead of the green continuously flowing, there's now a red line above it, which indicates that the momentum and the volatility is now trending to the downside. And then we're always going to see this constant bull and bear battle where it's going to go from green to red. And you're going to see here that as it breaks above this current red line, it starts to turn green again. And then it tries to break up even further, but unfortunately it gets rejected. It moves back down below the green line, and that's where the red ends up showing as well. If we were to look at it only on the daily chart, it would be extremely difficult for us to gauge where... If we looked at it only on the daily chart, it would be extremely difficult for us to gauge a long-term trend because the daily chart is just too low of a time frame. But if you actually go to the 4-day chart, what you're going to see here is that there's less breaks and it's consistently moving to the upside. So one very common strategy to use, for example, in early of 2017 here, people would end up buying as it breaks above the red. So for example here, as it's green and it breaks to turn red for the first time, it's going to continue to trend red over here. And then the first time that it breaks above the red, that would be a great entry for long term. Now, it doesn't guarantee that it's going to trend. So my recommendation, if you use it in this particular way, where you're entering it as it breaks over here, don't enter it as soon as it breaks the first one. Enter it when there's a close above it successfully, such as this candle here. Now, if you were to enter it on this particular candle here, an exit, for example, would be below the Chandelier exit indicator. So if you take a look at it on the 4-hour time frame, what you're going to see is a lot less interruptions and it consistently flows to the upside. Now, the difficult part about the Chandelier exit indicator is that it's difficult to know exactly which time frame first of all to use. Therefore, it's imperative that you cycle through the different time frames and you find out which ones are staying as close to the green line as possible. You don't want to, for example, trend to the monthly chart because the monthly chart will have too large of a gap between it. When we're using a specific time frame, you're going to see it often change from green to the red. So it's important that we find a time frame where you're going to get the majority of it as a green line below it. This way, you're not going to get as many interruptions and it's telling you a larger degree trend. So here on the daily, you see it mix up often, but then on the 4-day, what we're seeing is a more consistent green line that doesn't break often. So then a really solid strategy would be when it finally turns green, you enter it on the next candle that is green and pushing to the upside. And your stop loss, once again, would be slightly below the green line. So if you were to enter it here, for example, at $650, the next time that you would take your profit would be when it goes below this green line. So you could have rode this from $650 to about $972 for a 44% gain. And you would continue this process in a bull market, and you can choose whichever time frame you want, But keep in mind that on the lower time frame that you choose, there's going to be more of a combination between the green and the red that will occur. Because the red, when it occurs like this, it's telling you that there's a consolidation and there's a correction that's underway and the volatility has now changed. Let's just say that you entered a trade around the April range where you see this, first of all, in red. So this ideal strategy would be to enter it on a breakout above the red and a solid candle that closes above it. So realistically, you would enter probably on this candle right over here on this one. So then you would allocate a pretty gigantic stop loss. And the key to this is for long-term investments, not for day trading, not for swing trading, but more so to accumulate for a long-term position. So when you find yourself entering here, you would say to yourself, I'm not going to stop myself out, or I'm not going to take my profit until it actually turns red again. So if you entered over here at around $1,200, you wouldn't take your profit until it hit right around here at $2,400. And this would have given you a 100% profit over 2 short months. And as you can see here, you do not enter any trades because it's still in the red. And then as it breaks above there, once again, so this one here, you can enter it on this strength. That's pretty clear that you would consider entering that. You'd be observing on a lower time frame. You would see that the break is above $22,030. So if there's a lot of volatility and it's smashing above this red line, the best thing to do would be just to enter. And then you would allocate a stop loss below this green line over here. So then if you were to follow this strategy and you entered somewhere in the middle of this green bar, you wouldn't take your profit until it reaches red again. And this one would have nailed you a 62% profit over 53 days. And these are the strategies that I'm teaching in my Ultimate Bull Market Strategy Guide. I highly recommend for you to consider getting it. I'm releasing an awesome gift package. The last time I did this, I released the Philakone course version 2.0. It was a solid 250-page book that came in a gift package. And I'll be releasing something very similar to this again. And it is such an amazing book. I'm about 150 pages in it. You're going to get the book that's going to come with a beautiful gift package. You're also going to get some really cool knickknacks. This is just an LED crystal display of a Team Philakone that you can put on top of your desk. I want you guys to feel like I'm always a part of you when you're trading. You're also going to get a cool Team Philakone bobblehead that's just going to sit in your desk just for craps and giggles. You can laugh at it and have fun while you trade. And you're going to get a contract as well. A small little contract that's just for your peace of mind that comes with the book that you're going to sign and make a commitment to yourself that you're going to study extremely hard and you're also going to commit to this upcoming bull market. And I really hope that you use this course wisely and especially the book as well. It's designed to motivate you and inspire you, where I share with you a lot of the struggles that I've been through as well. And the book is designed as a companion book for the online course as well. So you're going to get the book, you're going to get the Ultimate Bull Market Strategy Guide, you're going to get a lifetime Discord membership, a really cool gift box that comes with it, and also you're going to be entered in a raffle. So there's only 100 people that are going to be able to access this because I'm only releasing and producing and publishing only 100 books. So out of 100 people, one person is going to win the grand prize of being able to come on an all-exclusive vacation to Istanbul, Turkey, where I pay for your flights, I'll pay for your hotel, and I'll pay for all of your food and everything that we do here. So we can just hang out and spend 3 days together where we can see Istanbul, Turkey. And we can also day trade together where you're welcome to ask me anything that you want. And this is going to have a 100 limited release and the price is going to be $1,250. And I'm going to have a lot of samples for you guys to take a look at. And I know for a fact that this Ultimate Bull Market Strategy Guide is something that's going to really help you with your journey to success in this next bull market. And you have to ask yourself, are you preparing for this bull market already? If you're not preparing for it already, you should be. Because the last thing you want to do is jumping onto how to study and what to do in this upcoming bull market. The bull market is the final exam and there's no more studying. You've had all the time in the world to study and you're going to be tested in this final exam, and you better do well if you want to succeed and be profitable in the bull market. So let's get back to the TA. I just wanted to tell you guys about that and I'm really excited to show you. So looking back on the Bitcoin chart over here, you can see that as it rallied over here, it dropped back down and it turned red. So what you would do is you would buy it, not on this candle, it's too small, but on the next candle, that's very bullish. So you would buy it, for example, if it broke above this high at 7,500, and then what you'll see is it keeps going. It keeps going. So you would enter around here, and then you would close it when it first turns red. And you can just tell right here that it's coming up very close. So here, this one was red, and by the time it closes, you might have even closed it down there, to be quite honest, okay? You could have very much so closed it there. And here, you probably would have been shaken out and been a little bit scared. So it's up to you how you decide to take your profit. If you decide to anticipate it and you think that, hey, it's touching the line right now, it can drop further to the downside, you might want to consider taking it as soon as you see a wick that's touching it. Now, another way is, of course, if you see a really ugly, bearish red candle and you're seeing a series of red candles that could look like it's going to drop. Now, the thing about this is it may not actually drop through and it may not even turn red the next candle. It might have hit this ATR on the Chandelier exit and then just bounced and kept going higher and higher. So there's always a risk of taking profit early because you might be missing out on a potential rally to the upside. So how you decide to take your profit is up to you. Personally, myself, if I saw a red stream of candles just like this going to the downside, there is no way that I'm going to try to ride it to the next wave. Because what I would do is I would minimize my risk. I would take my profit to secure these profits at this candle right there. And then if it turns red just like that, I might just let it continue to be red. And then I would buy it on another break to the upside as it turns green again. So this is a beautiful way for you to have traded this bull market. And what you're going to see is that in the bull market of 2017, the 4-day Chandelier exit indicator acted as an incredibly strong support the entire time. If we take a look at the 55 EMA as well briefly, we're going to see that it doesn't actually help us in any way because the market is too parabolic. So we cannot use this EMA to help us. Instead, we'd probably want to turn it to a lower EMA, for example, the 20, and that's going to give us a better gauge. So what we can see right now is that the 20 EMA, it acted as a fairly decent trend line that was holding during this entire gigantic bull market that was parabolic. So from an EMA perspective, unfortunately, it doesn't help us in any way whatsoever in the 2017 bull market because like any other parabolic rally, EMAs can be absolutely useless and it's better to use the ATR on the Chandelier exit indicator to give us a gauge. So now let's take a look at the previous bull market in 2021, and if we can see some similarities, maybe we can also translate these similarities to what we're seeing currently right now in the 2023 mini bull run that we're seeing. I personally believe that this current bull run has now marked the official bottom, and I don't think that we're going to see any lower prices than we've actually seen already back in November and December in the $15,000 ranges. Just based off of how the movements have been thus far, it's very difficult to believe that we can actually see much lower prices. So after we examine the 2021 bull market, looking at the Chandelier exit indicator and also the ATR, we'll take a look at what the market is doing right now, and keep in mind that this is the year after the bear market. And there's been 2 other cycles before, so we'll briefly take a look at those as well. And if we can see some similarities, it's going to give us a really good gauge of what could possibly happen and what we can expect to happen this year as well. So taking a look at the 4-day Chandelier exit indicator, what we're noticing is pretty much the exact same thing. The 4-day Chandelier exit indicator acted as an incredible support that measured the volatility all the way up to the end of April, and then it also helped as well reaching the end of November here. But keep in mind that 2021 was a very different year compared to 2017 because 2017 was the most parabolic year that we've seen, whereas in 2021, we saw it split up into 2 different segments, ultimately resulting in a near double top. If I could choose only one market to trade, I would definitely have loved to trade only the 2017 bull market. Like any other parabolic rally, all the altcoins have a gigantic chance to rally as well. But no doubt in 2021, we saw some coins like Phil, like Bell, like Axis, like Gala. They've done some amazing numbers numbers where they rallied to the thousands of percent in such a few short days. In the next bull market, I'm going to expect the exact same thing to happen as well. It's just a matter of finding these coins that are rallying a gigantic amount, waiting for a pullback where it's going to turn red on the Chandelier exit indicator, and then looking for another potential entry once we see a break of this volatility and it turns green, acting as a support on the downside. So we can see on the 4-day that many times before that, it turned from green to red as well. And we'll get to that very, very briefly. So don't go anywhere and make sure that you're staying here. So as you can see here that there's many flaws with the Chandelier exit indicator as well. If you end up buying it on the first green, for example, when it turns from red to green right here, you would have been stopped out as we see the prices decline to the bottom here. If it were me and I bought around here right now, I would not have actually exited my position. I would have kept holding on to my position as it turned red and it dropped below to the downside. And then what I would have done is as it turned to green again, that's where I would have added more to my position, because I know for a fact that Bitcoin's here to stay for a long time. And when there's low risk to buy Bitcoin, that's where I'm going to capitalize on it and add to my long-term portfolio. Because here you're taking a chance on a possible rally that could have gone to the upside. And then if you end up dollar cost averaging and then you're buying even on the major dip here and also more as it turns green right here, you're definitely going to be profitable, as you've seen how it reached $64,000 in April and also $69,000 in November as well. If you were to buy it on this particular breakout, as the Chandelier exit indicator ends up shifting to the green side, you would have stopped yourself out way over here. So you would end up buying as it turns green down over here, and then you would have rode this for a 400% gain to about $45,000. Now, one of the flaws is that it could drop significantly before you end up taking your profit or stopping yourself out. So one of the best ways to do this would be to combine using a lower time frame for an exit once you've already had a beautiful entry. So you can see here that with a daily, there are so many struggles, such as it turning red here, so you wouldn't have been able to ride it as far. So if you find a different time frame, perhaps it could have helped you. For example, on the 3-day, we also see it being very, very smooth. What about the 2-day? Are we able to observe anything? Yes, we do. Here, you probably would have been looking on a higher time frame, so you wouldn't have stopped yourself out. So for example, if you're using a 2-day, you would have taken your profit at $50,000, whereas on a 4-day, you would have taken your profit at $45,000, which is about a 12% difference. And of course, you can utilize other things such as the EMA as well. So if we take a look at the EMA, I use the 55 EMA because on the 55 EMA, that's a Fibonacci number, just like how 8, 13, and 21 is as well. So if we combine the 4-day Chandelier exit indicator that tells us to exit at $45,000 with an EMA that's used on a lower time frame, we see that on the daily, the 55 EMA, it has been a support that has been holding for a very long time since the beginning of this rally. So now you ask yourself, could I combine EMAs and Chandelier exits to get a proper exit? One of the best strategies that I would recommend would be to take your profit as it goes below the main EMA that has held traditionally for the longest time. And this would have been the 55 EMA on the daily chart. So if you took a look at the profit here, this would have nailed you a profit around the $55,000 range, which is a lot better than the $50,000 and the $45,000 price that we saw earlier. So just based off of the EMAs and the Chandelier exits, we're always going to find a time frame where it looks the best. So it's going to be one time frame where the Chandelier exit is trending green below the majority of the prices. And you're also going to find an EMA as well that's going to trend the same. So if we fast forward to the current time that we're at now to the present, we're going to see that on the 4-day Chandelier exit indicator, we see that it's actually holding incredibly strong. So one of the best strategies you would have used is you would have bought it on an entry of the break right around. This is a pretty big candle. So right around here, you would have bought it. This is 8% rally. Let's say you caught it in the middle. you would still be holding on to it and you would be up over 38% right now. Keep in mind that the Chandelier exit indicator is called an exit indicator because it's best used to exit your trade, to maximize your profits and to minimize your losses as a stop loss. It's used as a stop loss or a trailing stop. Keep in mind that it's not best to use as an entry. So here, despite entering at a pretty good price, there's probably better ways to enter, such as when you're seeing a bounce that has been supportive of here. So it bounces off of the 4-day Chandelier exit indicator, and then you break above this high of the previous candle. That would have been a great entry. But if you had entered over here, you would have rode it until it got up to here, all the way back down, and then you can choose to exit it when it turns red or when it's getting much lower than the green line. So this is giving you a margin. It's giving you a trailing stop loss to take your profits or to stop yourself out. So if you had entered over here, you would still be up a whopping 38 to 39%, and there would be no reason for you to exit your trade right now. So using a combination of the Chandelier exit and the EMAs, it's going to provide you a great opportunity to find an entry and perhaps also find an exit as well. If we take a look at the 55 EMA right now on the 4-day, have you noticed that it's trending and coinciding very close together right here? So always use a combination of both of them. So what we're going to notice if we go back a little bit to the year after the bull market is we're going to notice this. So take a look over here on the daily. This year is the year after the previous bear market. So it would be equivalent to the year of 2019. If you take a look at the year of 2019, it marked a lot of green and red and green and red as well. If we take a look at it on a 4-day, we're going to notice even more. So if you take a look at 2019, which is the equivalent year that we're in right now, the year after the bear market, you're going to notice that there were periods of green that had massive rallies of about 330%, and then it turned red, and then green, and then it dropped down below again. But keep in mind that in 2020, despite having a major 75% drop, we didn't actually fall below the prices of 2019. In fact, if you had entered right here and you were holding on for pretty much the whole year, you still would have made a gigantic profit. But of course, that's not the best way to invest or trade sometimes, right? You always want to consider taking some profit after it has reached some astronomical amount and then adding more to your position once we find a great dip or once the momentum is strong again and it's gaining strength. So here would have been a great entry as it turns green again. But if we take a look at it and compare it to now the 2015 bear market, which is equivalent to the 2019 one and also the 2023 one that we see right now, we're seeing something very similar. We're seeing that it turns from red to green, red to green, red to green multiple times leading up to 2017. But nevertheless, the 4-day has been a very, very strong time frame that has indicated that the rally and the volatility has stayed true to reach the bull market. So if we take a look at the 2017 bull market here, it changes quite often. What we noticed though in the 2015 year is that despite it rallying from here to there, it actually ended up dipping and making a lower low by just a small amount. So that's one of the scary things when you compare 2019, 2015, and now. So we always have to ask ourselves, is there a potential to actually see a lower price? Well, based off of history in 2015, yes, we did reach a lower price, but I think it would take a lot for us to see a much lower price. Because if you compare this right here to how this section is looking in 2015 to, for example, this bull market right now, this is looking incredibly defined. The bulls are picking it up full notch. And this curvature, the way that it's parabolically going to the upside, the way the Elliott wave structures are looking as well, it definitely seems bullish. And I do believe that the people that are waiting for 10K, for 8K, for 5K, I think these people are going to be waiting forever and they're not going to be able to catch those prices that they want. That's why I believe that dollar cost averaging is your best friend Now, I'm not suggesting for you to do that exactly, but if I had to give advice to a good friend, that's exactly what I would be telling them. I'd be shaking their head and telling them to dollar cost average as much as they can, because they'll never be able to time the bottom. But dollar cost averaging, it ensures that you are always going to be in a position when the bull market does come. So I just wanted to bring to your attention that the Chandelier exit indicator, to conclude, and the EMA, it should be one of the arsenals and weapons that you pack to constantly use and to evaluate the market, to give you a good gauge of if the bull market is here, and especially how we're trending as well. So make sure you're learning about that if you don't know how to use EMAs and also the Chandelier exit indicator. And before we finish off here, if you guys enjoy the content that I produce, make sure you're hitting the like, the subscribe, and the notification button. My job is to provide you with top tier technical analysis and to educate you from my day trading experience of 8 years. And I've also turned $2,000 to well over 7 figures. So I definitely want to extend a hand and help you guys out as well. A lot of people have been asking for some Team Philakone essentials, some of the really cool things that I've designed that I thought would help people trade better, to gain more consistency, to make sure you're abiding by your rules, is I've created these LED mouse pads that are gigantic, just like the one that I have here. It's going to take up a large portion of your desk. It's going to light up. But more importantly, it's going to have a set of rules that's going to help you stay true to your word, to stay disciplined, and to focus so you can remember exactly what not to do. And I think that if you read these rules every single time while you're in a trade, or even before you enter a trade, it's going to help you. So take a look at this. It's in the link below. You can see it in the bio.site/Philakone. And I've also created another one as well. So there's 2 different versions of an epic mouse pad, and they only go for $39.95. So I thought that was very reasonable as well. And if you guys also want some of these cool hats, like a Team Philakone Day Traders Club hat here, you can also take a look at the different merch that I have if you would like to support me and wear one of these cool Team Philakone t-shirts as well. So thank you very much for joining me. I appreciate all of your time, and I hope that you're staying strong while waiting for this upcoming bull market to happen. I can't believe that it's almost April already. I remember everybody still crying last year in the bear market, and it's only just a little bit more time until we get to this bull market. So make sure you're constantly studying, and make sure you're staying positive and optimistic and minimizing your losses so you can hold bigger bags for when this bull market does come. So thank you for joining me, everybody, and have yourselves a great day. Bye now.